What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see selling across the board in the stock market, and with FOMC and quad witching this week, it's going to be a very noisy week, so it's going to be extremely important to stay objective. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up on SPY, we can see that we were down 0.89% today, and we did close right on top of the 5 EMA. So the price action is still bullish above all the moving averages, and we did regain the full bull trend today. It's a very close call, but that 13 EMA did cross back above the 20 simple moving average today, so we can now say that all of the moving averages are stacked to the bull side. When you get the full bull trend back on the daily chart, you're starting to get more of a bull bias back in the price action, because when you have a bull trend, or any trend for that matter, it does help push the price action in the direction of the trend. So we now have a bull trend on SPY on the daily, weekly, and monthly chart, so there is now a very strong bullish bias in the trend. You know the saying is the trend is your friend, and right now we still have a very strong bull trend, and the price action is still well above our critical support. Our critical support levels on SPY are 464, the full gap close right around 460.6, and then the 50 EMA at 459. As long as we're staying above the 20 simple moving average with this full bull trend, it's very likely we are going to see a brand new all-time high in SPY. Remember, the brand new all-time high price target is up there at 477, and we need to get another breakout above 470 because we usually need to see at least 2 breakouts above a resistance level. So far, we just have 1 breakout above that level, and now we're cooling down a little bit, resetting some of those technicals and getting ready for another attempt to break out. The next time we break out above 470, it should be a quick trip to 477. But remember, we have to stay above the critical support. So watch 464, the full gap close, and the 50 EMA, and as long as we're staying above those levels, you do want to stay bullish. If we start slicing down through any of these support levels and we see high volume selling, you need to immediately get more defensive. And remember, there will be a lot of noise this week around FOMC and quad witching, so it could still be a very volatile week. So it's very important to watch the price action and make sure you're staying objective. If you see a full bull trend and you see price action staying above support, just stay bullish because that's the only way to stay objective. If you're seeing price action above support and you see a bull trend and you're starting to get bearish, it's more than likely just your emotions. So continue to watch the volume, and as long as you don't see high volume selling and you see price action above support, we're more than likely going to see that brand new all-time high, which means we're more than likely going to see the Santa Claus rally. On the NASDAQ 100 triple Qs, you can see we were down 1.44% today, and the price action did slice down through 3 of our moving averages. We closed right on top of that gap, which is a support level right around 392, and the full gap close will be 388. So on the triple Qs, we see a little bit of a different story than SPY because we don't have the full bull trend, and the price action did close below the 20 simple moving average. So on the triple Qs, you now need a critical resistance breakout back above 395, and we need to hold the critical support level at 388. Remember, the triple Qs don't have the full bull trend, so you don't have the bullish bias on the daily chart, but we do have the bullish bias on the weekly chart. So more than likely, the triple Qs are lagging behind. If the S&P 500 is going to a brand new all-time high, we'll very likely see the triple Qs going to a new all-time high as well. There's no guarantee that we have to see it, so watch the price action, and the next critical breakout will be above 395. Above that, we still need to break out above 401, and then we should start getting the full bull trend at that point, and we should have enough energy to get to the new all-time high prices at 410. If we can get that full bull trend and get to a new all-time high, we could still go higher than that, but let's wait for the full bull trend before we start talking about all-time highs. Now, if we start breaking down below 388, we're more than likely going to start seeing that high volume selling, so watch the volume and watch the price action at that critical support. If we break below 388, you have the previous support level down here at 383. On the Dow Jones, we were down 0.89% today, and we see the Dow Jones looking very similar to the S&P 500. Price action is above all the moving averages, and we did gain the full bull trend today. So you can see 2 out of the 3 indices are still looking bullish with both price action and trend. So it is more than likely the triple Qs are either seeing sector rotation or just lagging behind. So on the Dow Jones, you have critical support right around 356 and the full gap close at 354. So there is plenty of support below price. With the full bull trend, it's more than likely we're going to continue to trend higher. So the breakout level will be back above 360, and the previous all-time high will be resistance at 365. On a breakout, we'll see the new all-time high price up there at 372, and we need to stay above this critical support level at 354 to maintain the bull trend. On the Russell 2000, we were down 1.69% today, so we still see the Russell 2000 playing games around this support level at 213, which is the very critical support level. If we see the Russell breaking down below that critical support at 213, we could see a full-blown bear market, and you already know we have the full bear trend with all the moving averages stacked to the bear side. So once you have the full bear trend, it's extremely imperative that price action stays above critical support. So on a break below 213, that will be very bearish, and it could mean we're going down to 205. Now, if IWM can stay above 213, the bullish breakout levels will be back above the resistance trend line at 220, and we really need to see a price action close back over this 50 EMA, which is currently sitting at 226. Above that, we have the full gap close at 228.5, and the bullish breakout will be back above 232. So right now, you need to stay bearish or defensive on IWM until it can get back above 226, and you definitely need to get a lot more bearish if it starts breaking down below 213. So the critical breakdown is below 213 and the bullish breakouts are above 226 and above 232. On the ARKK ETF, we were down 1.74% today, closing right around that support level, right around 94. As you could tell, ARKK did close the gap right around 95, so it's time for the ARKK bulls to start stepping in and breaking out of this resistance trend line. We'll need to see ARKK breaking out above about 102 and closing above 107 and getting back over the 50 EMA, which is currently right around 110. As long as ARKK is trading below 110, it will still have the downward bias because we do have the full bear trend. On a breakdown below support at 90, we could be coming all the way down to 85, and because we're in such a strong bear trend, it's more than likely we'll continue to go lower until we see that bullish breakout. On the VIX, we were up 8.6% today, and we closed just above 20 at 20.3. So we're definitely seeing a little bit of volatility, but that's completely to be expected this week because we do have a lot of noise around this week with the FOMC and quad witching. Now, we already know that the VIX closed back down below 20 for 2 days, so the bulls still do have control of the VIX as long as it can stay down around 20 and definitely below 20. The next bullish breakdown will be a close back down below 18.2, and you need to get a lot more cautious if the VIX starts spiking up into the mid-20s. If we see the VIX getting up to about 24 to 26, we could see critical support breaking down and we could finally get that full-blown correction. So if the VIX is below 20, you need to stay bullish, and if the VIX gets up near about 24 to 25, you need to get a lot more cautious. On Bitcoin, we're currently down about 6.9%, and we see Bitcoin does look like it's heading down to that support level right around 45,000. The next support level below that will be right around 42,000, and below that we need to hold up above support at 39,000. Remember, Bitcoin is not bullish until we can get a close back above 53,000 and eventually closing back above 60,000. So remember, it has a full bear trend and we're currently testing critical support levels, which means if we break through support, we can continue to go lower. Don't get overly bullish on Bitcoin just because it's going lower, because it could still go much, much lower. Watch these support levels, and if we get the bullish breakout, you can start looking for higher prices. But right now, wait for that confirmation breakout above 53,000 if you're waiting to get bullish. On Amazon, we were down just over 1.5% today, closing back down below 3,400, which means we could be seeing Amazon coming back down to 3,311. Below 3,311, we could be coming back down to 3,185, so we really could see a lot more downside now that Amazon is trading below 3,400. To get bullish, we would need to see a breakout back above 3,460 and getting back over that 20 simple moving average at 3,520. Don't get bullish on Amazon if it's trading below the 50 EMA, and as you can tell, it is developing some bearish trending. We need to maintain these higher highs and higher lows, and it's still possible Amazon does try to bounce off of this recent low, which is right around 33.88. If we did bounce off that low and we broke this neckline up here at 35.20, we could see a little bit of a double bottom look, but don't just assume that has to happen, just watch the price action, and if we do bounce from here and break that neckline, you can plan accordingly. On Tesla stock, we were down about 5% today, and we definitely see the Tesla bears taking over. Remember, on a close below 1,000, it's very likely we close this gap at 906, and it does look like Tesla is heading down to close that gap. There's still a support trend line right around 938, so it's possible we don't fully close that gap before we bounce and find support. But even then, we'll likely just retest resistance at 1,000, get rejected, and fully close that gap at a later date. So don't get bullish on Tesla while it's below all the moving averages, developing bearish trending with 2 gaps below open. That's very reckless, and we could definitely see we were going down on increasing volume, and we're very likely going to see these gaps fill. It's not a matter of if, it's just a matter of when. So watch those gaps right around 909, support right around 900, and the other gap close at 843. And don't try to get bullish on Tesla unless we can close back above 1,000, which means we'll still have strong resistance right around 1070. On Apple stock, we were down 2.07% today, and we did see Apple just getting way too far, way too fast. We were way outside the upper Bollinger Band, and we were just going up in a straight line without any pullbacks. So this is completely normal, healthy price action. Look for support right around 176, the 5 EMA at 174, and the other support levels are at 170, the gap close at 168, and support right around 166. We have the full bull trend, so it's likely we could consolidate and build a bull flag before going any higher. But remember that Apple has satisfied all of my price targets and could go through a full-blown correction at any time. We went lower on increasing volume today, so don't ignore that. And if we start to see price action slicing through support and breaking back down below our 20 simple moving average, we could see that full-blown correction in Apple stock. But right now, the highest probability chance is consolidation and a bull flag because we still have a very strong bull trend. The financial sector was down just over 1% today with the price action closing below all the moving averages, and we do have a bear trend. So right now, the financial sector is looking very weak until it can close back above the 50 EMA. The industrial sector was down just over 1% today, closing back above the 50 EMA and very close to having the full bull trend if we can get back over that 20 simple moving average. The healthcare sector was up 0.94% today and confirming the bullish breakout with a continuation of the bullish price action and holding on to that full bull trend. The energy sector was down just over 2.7% today and it did close back below the 50 EMA, and it's starting to look like we're getting a failure to break out of that resistance trend line. It still looks like it could be close to a bull trend as long as it can stay above that 50 EMA and close back above the 20 simple moving average. So jumping back over to the S&P 500, this is going to be a very noisy week. We have FOMC and we have quad witching on Friday, and there's going to be plenty of noise and more than likely plenty of volatility. Stay objective and follow the price action, and as long as we're staying above critical support and we don't see high volume selling, remember that we have the bull trends and we're still in a bull market. It's very easy to forget this is a bull market when there's a lot of noise and everybody is panicking. But just remember, more often than not, when everybody is panicking and everybody is getting bearish, that is usually when you want to be greedy. It's very difficult to go against the crowd, but remember the crowd is usually wrong and the market usually does fool the majority. So if everybody is expecting one thing, it's more than likely you're going to see the exact opposite. That obviously doesn't always apply, so stay objective and follow the price action in the trend. And right now, we still have bullish price action and a bull trend in the S&P 500. Everything's subject to change, so take it day by day and step by step, and just don't take on too much risk this week. There's no reason to get over leveraged when the market is in a period of uncertainty. Wait until we have a much more clear picture, and you already know we bought the dip down here off critical support, so we have plenty of cushion to hold on to our long positions and let this market play itself out before we have to make any rash decisions. Remember, set your risk accordingly and use proper risk management, and you'll consistently come out on top in this market. You don't have to win every trade, you just have to make sure your losses don't outweigh your wins. Right now, this market is setting up for a Santa Claus rally, but that's subject to change if we see bearish price action and we lose the bull trends. Also, don't forget this is the last week to claim the Black Friday deal on Bank Trade Alerts, where you can get 67% off your first month. Bank Trade Alerts is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. So with all this market volatility, this is the best time to be a bank member and claim that 67% off promotion code. If you want to try out Bank Trade Alerts, you can find out how to get that discount and how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.